I don't participate in the national debate anymore because the one thing I've never heard anyone say is, I stand corrected. The only minds we have control over changing is our own. The very best we can hope with others is to inspire them. And the most effective way to inspire is with love, authenticity, and by creating an environment where people are willing to listen to what you have to say. If you're tired of all the blame and political gridlock, if you're tired of waiting around hoping politicians will fix our broken financial system, if you're ready to take simple steps to make lasting change, you've come to the right place. Ready to be inspired? This is the Crowd Effect Podcast, and I am your host, Paul Lovejoy, activist investment advisor at Stakeholder Enterprise. On today's show, I'm going to be talking about how the next bank failure will occur. But before I do, I want to tell a quick story. A few years back, I was pulling out of a parking lot, out of my spot in a parking lot. And when I pull out, I noticed that there's this car who is blocking the exit because they're trying to go around another car in the entrance lane. And I look at this person and I'm thinking, what are you doing? And there's someone trying to get out of a spot, and so everybody is stuck right now, just waiting for someone to get out of a spot to clear the way for this other car, and this person is just uh, stuck blocking the exit. So I kind of look at this person like, what are you doing? Um, but then I just take a deep breath and I just let the situation play out. And so finally, when I'm leaving the parking lot, the person who's a woman, she tells me to roll down the window, and I go, okay. I didn't know what she was going to say. She said to me, "Did you know that there is another exit on the other way?" Uh, and it took me by surprise that she wanted to, I don't know, dumbass me or whatever it was. And I responded with, well, did you know you're blocking the exit? And so I just kind of drove off, and I was upset about that. I was thinking, you know what? Had I known she was blocking the exit, I would have gone the other way. And so I was thinking about what she was saying, and then it kind of it made me upset. And then I got a little satisfaction because I thought about that what I just thought of. Well, if I saw that you were blocking the exit, I would have gone the other way. Then I was like, oh, I wish I said that to her. That would have gotten her. She would have been burned. And it gave me a little bit of satisfaction when I played that out in my head. But then I thought, well, I didn't think of that. I said what I said, and she said this, and it kind of kept on replaying in my head again and again. This experience of, and like, I was trying to think of other things I could have said to, really get her, maybe teach her a lesson. And this went on for not consistently throughout the day, but throughout the day I would think of this experience, and every time I did it, it hurt. That it hurt what she said, and it was constantly trying to get revenge in my mind on how I felt like she was disrespecting me. Um, and it even the following days I would think about this, and I had to get this to stop because I can't be thinking about this all the time. So I've been practicing forgiveness, and I decided that I was going to forgive her. So when the experience in my head of her rolling down the window and telling me that I know that there was an exit on the other side, instead of trying to get back at her, in my mind, I told her, "I hope you can find it in your heart to forgive me." And uh, this allowed me to forgive her. It it I no longer felt this discomfort every time I thought of her. In fact, I didn't think about that situation ever again until telling this story right now. Forgiveness is powerful, and I don't forgive for other people. I forgive for myself. Now, practicing forgiveness, uh, overwhelming amount of research shows that it's associated with all kind of health benefits, like lower blood pressure. What else do we have here? Lower levels of depression and anxiety, better immune system functioning, significant reduction of stress, improved relationships. Um, Again, we don't forgive. I don't forgive. It's not for others. I'm not forgiving for others. I'm forgiving for myself. When I forgive somebody else, it's not because I think they deserve forgiveness, and it's not because I condone their behavior. And I'm when I forgive, I certainly don't think people shouldn't be held responsible for their actions. They should. Forgiveness has nothing to do with that. It simply is that I don't deserve to victimize myself again and again and again and again in my own head every time I think about what someone says or does to me, like this woman. I was thinking about what she said to me, which I felt like is she wronged me and disrespected me in a way that I didn't deserve, and and I didn't. But she said that to me once. I replayed it in my head, dozens of times, and I was victimizing myself every time I was thinking about that. And it wasn't until I forgave myself by asking, or forgave her by asking for her to forgive me. And this is a lesson I learned from Don Miguel Ruiz, that we don't forgive for others, but we forgive for ourselves. So, moving on to how the next bank is going to fail. The IMF yesterday gave out a warning about this, and it has to do with what happened with Credit Suisse Bank. Now, here in the United States, we had Silicon Valley Bank and Signature, and the one in Boston, I forget its name at the moment. Uh, and Europe had Credit Suisse. That was their bank that had a lot of trouble, that needed to get bailed out by other banks. Um, and what happened is that you have these hedge funds, and in these hedge funds, you have investors that are really nervous about the state of our economy right now, and so they're thinking that things will go down. So a hedge fund, what it's designed to do is to um, make money when the market is good, and make money when the stock market is not in the bear and the bull market. So when it's a bull or a strong market, there are stocks and investments to make money on that, and when there's a bear market, then there are um, investments that will help. So there's something called shorting a company, and that's essentially betting that a company will do worse, based on not just betting, but it's based on research and trends and things like same way you would bet on a company to improve and to get better based on its quarterly earnings and so forth. Anyways, you're betting that a company will lose, and so these hedge funds um, were picking up on Credit Suisse's decline. They had a number of things that made their account holders withdraw deposits. One of them was that they were found guilty in a money laundering scheme with cocaine dealers. Um, and a lot of people were pulling their money out. Other reasons as well. And so these hedge funds managers noticed that, and so they take uh, a short position into Credit Suisse, and you have a bunch of them that do that. And these Hedge funds, this is where the super rich park their money. So there's a lot of money going into shorting Credit Suisse. And so again, it creates an effect where now people are seeing that there's a large short position on Credit Suisse, which makes people even more nervous about keeping leaving their money there, and so more people withdraw money. They take their deposits, and so it kind of creates this snowball effect once you start shorting, especially a bank. Horrible results, and it led to the bank almost collapsing. Had to get bailed out. The Swiss government bailed it out, as well as private banks. So this was kind of the decline of Credit Suisse. Now the IMF warned that this could happen again. That these hedge funds, they made a ton of money. Credit Suisse stock price fell 75% in 1 year. Imagine you're a hedge fund and you have that position, and 75% in 1 year. That's a huge return. So now they're licking their chops and saying, "Oh, where else can I get money? Make my investors proud of me." So the IMF is warning that these hedge fund managers are now going to be looking for the next weakest bank and do that same strategy on them, short a bank and create this snowball effect for the bank to decline and to make their investors a ton of money. And anytime a bank fails, especially, well, a publicly traded bank fails, it does cause ripple effects across the entire economy. The IMF warned that uh, having another bank collapse, like Credit Suisse, would slow down global economic growth to where they're giving predictions where it could be as little as 1% growth, which is statistically considered no growth at all. Recession. And this is very likely. I mean, the shorting the stock market, there is some positives with that, but there is a lot of um, it is associated with making the company's demise happen quicker, or being that straw that breaks the camel's back of the company, the shorting a company. So this is a big concern, and it could have ripple effects throughout our entire economy. So that's our big news story, and it's going to transition well for the financial tip of the day, which is don't invest in the stock market. The stock market is declining. 20 years ago, there were over 8,000 publicly traded corporations on the stock market. Today, it's down to about 4,000. And the reasons for this are a number. When you transition from a private to a public corporation, now there's all these extra regulations that happen with that, which makes it more expensive for your company to operate. Uh, Also, there's when you're public, there's this pressure to constantly increase your profits every quarter, and uh, other suppliers and vendors know that about publicly traded corporations, and they use that as negotiation tactics to get a favorable deal. And so there's these situations that make a publicly traded corporation not very desirable as it used to be. There's a paper written how the return on the stock market is also declining, and a lot of the wealthy accredited investors are putting less money into the stock market and more money into the private market. So don't invest in the stock market. Instead, become a crowd investor. Crowd investing is the only way the general public, 98% of US income earners, can invest into this private market. You get uh, solid market returns, good returns, and crowd investing is diversified by nature with such low minimum investment requirements of things like $10, $100, whatever it may be. It's very easy to get diversified with crowd investing. It's also you could become a bank as a crowd investor, and it allows you to have predictable, stable sources of income. So, tip of the day: stop with the stock market. Besides, when you invest in the stock market, you're investing in corporate bottom line. You're investing in outsourcing. You're investing in U.S. companies manufacturing in places like China, all of which contribute to income inequality. So it's when you're crowd investing, it's important to note that you're not doing that anymore, and instead you're engaging in an investment system that is democratic, that decentralizes wealth, and it decentralizes power by decentralizing wealth. So that's our show for today. My name is Paul Lovejoy. I am a crowd investor, and I see you are one too. If you'd like to know how to fix our broken financial system ethically, legally, and without confrontation, go to stakeholderenterprise.com.